My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to help you save some money. My job is not just to entertain, but to teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Well, I heard it all day today. I heard it called the end of the bull market, the popping of the bubble, the beginning of the real pain.
The house of pain.
I get why. I mean, the Dow plunged 450 points. S&P plummeting 1.89%. And the NASDAQ, I mean, I don't even want to look at it. It was like, well, okay, it was down 2.72%. But you know what? The air's been going out of the balloon for months now, with the balloon being the speculative names. And today it reached the end in FAANG, Netflix. And the pin action, well, the pin action really did spread all over the market. But this is just the process I've been warning you about for 2 months, ever since they did not stop pumping out all of this junk, these underwriters. Unless a company's got a real product or service that can generate substantial profits, its stock just won't hold up, at least not for the near future. We had too many new stocks, too much junk, and not enough money coming in. And remember, it is a market, and there's more to sell than there is to buy. Listen, for over a year, I've had to hold my nose at 9:30 a.m. when I heard the bell that told for newly listed companies that were flimsy and deserved none of your time or money, and I said that. Now those chickens are coming home to roost, so I urge you to look over your portfolio and ask yourself if you know what your companies really do. Are they losing money? Do the stocks trade on revenues rather than earnings? Do they trade at sky-high prices to earnings multiples? Are they really just crazily expensive? In that case, it's going to remain painful because this is a true shakeout. If you want to take a chance with these plummeting high flyers, you can't afford to own more than one or two, and you can't afford to listen to the show because it's not going to help you. Now, we're willing to accept a couple of historically expensive stocks from my charitable trust, a couple, and you can follow by joining the CNBC Investing Club. But otherwise, this group needs to be sold into any strength like you had yesterday morning. The good news is that the market got really oversold today. It's at -6 in the oscillator. That's a start. And pessimism reigned supreme. The bad news is that we are now in the heart of earnings season, where you may own a clunker because of supply chain issues, raw costs, or what's happened in the tail end of the pandemic, if only because Omicron looks like it's going to get nearly everybody. Plus, bonds soared today. That's a flight to quality, as some grizzled traders believe that the Russian bear takes Ukraine this weekend. I have no real intel on that, but it brought the S&P and the Dow down later in the day. It was Russia that drove it down, not Netflix. Doesn't matter. If you buy high-quality companies, we're going to come through this okay, even if you just start here and buy lower. With these caveats out of the way, why don't we go to our game plan for next week? Stay rational. It's one of the heaviest weeks of earnings season. On Monday morning, we hear from a key player in a once-scorned group that's now loved, and that's Halliburton, the oil service company. While the oil companies are indeed on fire, they're doing well precisely by not drilling excessively. Will Halliburton tell us that their discipline is breaking? Good for Hal? If you like the oil stocks as much as I do, this is a must-listen conference call. The oil stocks are a great place to be here. After the close, IBM reports that I'm expecting very little from what should be an extremely convoluted quarter because of the Kyndryl Managed Infrastructure Service spinoff. I do like the way that CEO Arvind Krishnan is rationalizing the business at all costs. Classic example, IBM selling certain assets from its Watson Health division to a private equity firm. Remember that? Lots of burned capital there. Tuesday morning, we get results from two companies that are doing everything they can to make money for shareholders. They're breaking up, General Electric and Johnson & Johnson. We need to know how all these different divisions are doing. Their stocks did not react well to the breakup announcement, and then the market turned ugly. So there's a lot to unpack here. No hurry. You can afford to take your time in analyzing both of them. Neither one is going to run away from you. My favorite stock for Tuesday morning is one that could run away, and that's Lockheed Martin, because the country seems woefully unprepared for what feels like a new Cold War against the authoritarian axis of Russia and China, not unlike 1952-55. Meet the new Cold War, same as the old Cold War. Let's see what CEO Jim Cramer has to say. I like America's best going into the quarter, thanks to the resurgence of small and medium-sized businesses, but also thanks to the return of travel I expect post-Omicron. I actually expect a good quarter from these guys. Then after the close comes the incredibly important Microsoft. We need to hear about continued growth in Azure, Microsoft's cloud computing hub. A lot of people are now worried about online. Shopify went down big today. People are saying that online's over. This is not true. The Federal Reserve Open Market Committee closes out on Wednesday. We're going to hear from Jay Powell about tightening and shedding bonds. Now, many of you feel this whole decline is anticipation of what Powell will say on Wednesday. I disagree with that. I believe his comments will suck liquidity out of the system, too. I think the current sell-off simply marks the end of what amounts to a wholesale pump-and-dump scheme orchestrated by the private equity venture capital complex in the form of garbage SPAC deals and low-quality IPOs. Now, Powell will talk about his schedule of rate hikes, and as long as he doesn't say he's going to do it in lockstep, I bet we'll be fine. Hey, by the way, a lot of what he said is already, he's already slowed the economy down. Of course, it's more than the Fed. Boeing reports in the morning, and I'm expecting nothing. That's right, rien. That's French. Nothing. Not anything on China, not anything on orders, not anything on the 787. If you expect nothing, you see, you're never disappointed. That's right. You hope for the best, but you prepare for the worst. And that's how I'm approaching Boeing for the investing club. The aerospace cycle is just too good to ignore, but the company's not well managed. If I were Boeing, I literally would do this, and if they could call me in, but I like my job. I would start by talking about defense, not commercial, because it's really hard to screw up defense when you got a Cold War. It's not great either, but at least it's better than 787 and MAX. We lost Netflix. How about Tesla? After the close, Elon Musk will give us his forecast. I expect another good quarter. He's got really good news this week. In Europe, New electric vehicle sales passed diesel sales. Wow. Given that Tesla's Berlin plant is on the rise, and Musk has a ton to crow about. Pat Gelsinger talking about crowing. The CEO of Intel was talking about building a new Silicon Heartland in Ohio. We can talk about this later. $20 billion multi-year investment watershed. Oh, it would be great if he could pull it off. I hope he tells us how it will be funded when its company reports after the close. Intel generates a ton of cash. It's like a slot machine even. But I wish the state of Ohio and the federal government would help them out more directly, especially the Defense Department, because the semiconductor supplies are a national security issue because so much of our semiconductors come from Taiwan, which is at the heart of the Cold War. On Thursday morning, we get one that might be easier than others. McDonald's. Restaurant business is in disarray right now thanks to Omicron chaos and broken supply chains. We're headed for a winner-take-all scenario, and the last man standing will most certainly be McDonald's, among others. After the close that day, we get results from Apple. And you know what? This time it could actually be anticlimactic. You know why? For the first time in ages, Apple stock won't be coming in hot, which gives you a real chance to make some money on the company. I always say you should simply own, not trade. I'm ever hopeful that they'll break out the lifetime value of a phone buyer like a consumer products company. That's where the real money is now, and Apple can stress that superior technology and consumer love make the lifetime value very sticky. It's not a compromise to say it's consumer products. It doesn't make you into some, bleach company, for heaven's sake. Finally, on Friday, we have two really good companies, Chevron and Caterpillar. Chevron should be a monster. Travel Trust owns it. Lean, mean oil machine. Hope it goes down so I can buy more. Caterpillar, one of the more challenged industries because its oil costs are going up, but orders may or may not be able to override the impact because we never got that big infrastructure build back better thing. I'm not ignoring the elephant in the room, that the NASDAQ just had its worst week since the initial COVID crash. I'm simply saying that the market's following the script I laid out when the Fed started its new, less accommodative phase. You don't want to own the companies with no earnings, the ones that are valued only on sales and don't really make anything decipherable, including profits, especially when they're going after the real good companies. Now, yeah, they got to the great ones. But if you have, let's just say, it's not so much a funeral, it's just a sale. The bottom line, if you listen to the companies I just mentioned next week, I bet you'll be appropriately surprised at all the money these great American enterprises are making. But as for the not-so-great American enterprises like the SPACs and most of the recent IPOs, they'll be stuck in the house of pain for the foreseeable future. You won't make money instantly if any of the great companies turns around. We don't know what's going to cause the market to turn around. I am saying if you buy great American companies, not junk, you tend to do pretty well historically. Bob in New York. Bob.
Hey, Jim, I tell you, as a small-time investor, this sure feels like a full-blown market crash, and it's kind of scary. My question is about Starwood Properties, Jim. Starwood and A-Rod acquired 57 single-family rental homes in Palm Beach. Is this the type of transaction that is positive for Starwood going forward?
Well, when you're in one of these markets, you called it a crash. Let's just step back for a second. Let's say it's a really, really serious correction, so we don't get into an 87-like thing. So who do you want to bank with? How about a guy? I met this guy the first time at the Super Bowl in 2018, Barry Sternlicht. The guy's like a seasoned guy. He has been the kind of guy you bank with. He's got a nice yield, seems to know what he's doing. Stock was at 18, came on the show, said, don't worry. People bought it, made a lot of money. I like to go with guys like Sternlicht. And when the tough get going, Sternlicht is at the pack, in the middle, to then goes to the front of the pack. Matt in Colorado. Matt.
Hey, booyah, Jimmy Chill. This is Matt from Denver. I was calling wondering about Monster Energy Corp. I saw they recently acquired Oscar Blues at a long low. Wondering if you think it's a buy or a sell.
Oh, boy. Not yet. It goes lower. Sorry. How about Mark in Massachusetts, please? Mark.
Hi, Jim. How are you?
I'm good. How are you?
I'm great. I've been watching your show since it started back in the early 2000s, but it's the first time I've ever called.
Well, here we are. I'm glad you're on the show with me.
Yeah. So my question is about Home Depot. It's pretty much dropped about 70 points just since January 3rd and 35 points just since last Friday, which is about a 20% and 10% drop respectively.
Right.
PE is 23 in the Dow, and yet there's no coverage on this drop pretty much anywhere.
Well, there's no coverage to drop because people can't figure out whether homes are starting to go down in value, so therefore you put your money in a home, you're not going to do well. You know, Home Depot is a great American company, but what's happened right now is that in the last 10 minutes of any given day, there's no buyers, okay? So give us a good example. I just want to spend a second on this. Home Depot goes at 349. Do you know that if I told you at 330 on Monday that it's at 349, it could be at 330 by the end of the day. There's no liquidity. There's no liquidity. So all I can tell you is there's no liquidity, you buy 20 shares, then you buy 20 shares, you buy 20 shares. You have to do what we do for my charitable trust. You can't do it at one level. The market's just too uncertain. Laura in New York. Laura.
Hi, Jim. Thanks for taking my call.
You're quite welcome.
Calling to find out if you think the drop in Costco has been related to being a pandemic play, and if now's a good entry point, if it's a solid company.
Well, okay, so portfolio manager Jeff Marks and I spent most of the morning talking about whether we should come out and say to people, buy Costco. We were thinking about doing it, and the reason why is because we said we know it did great. It reported unbelievable numbers. It's a pandemic and non-pandemic play, but it sells at 37 times earnings, so we got a little gunshot. But that said, we own it much, much lower. We were willing to think about violating our discipline because this is the best-run retailer in the world. All right. Big week of earnings ahead. I think you'll be surprised at all the money these great American companies are making. And in the end, that's going to matter. It won't matter now because at 320, big sellers come in and knock the market down 2%. I can't help that. You have to think about it as a sale, not a funeral. As for the SPACs and many of the recent IPOs, I think they're going to be stuck in the house of pain for the foreseeable future. On money, bad money tonight. 8th band, Huntington Bancshares got crushed today after earnings miss, but it's got 4% yield. I kind of like it. I'm thinking him in the quarter with the CEO. Then after another tough day for the averages, just how worried should we be about the coming weeks? You know what we got to do? We're going to go off the charts. Be a little dispassionate. Find out. And you called me and you stumped me with some of your holdings, so tonight I'm turning in my homework. One of these two sounds very, very interesting. The other one, how about a dice roll? Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com. Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.